QuickBooks Pro Plus Desktop 2022 OneNote Presentation Comparative Balance Sheet Creation. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If we have access to OneNote, would like to follow along, icon left-hand side, topic introduction, 2100 Comparative Balance Sheet Creation. Also note, take a look at the Immersive Reader tool, topic introductions, also in the text area. Same name, same number, but with transcripts that can be translated into multiple languages, either listened to or read in them. We also have the same name and number as presentations. The topic introductions, designed to give an introduction to the topic, provide screenshots, links when applicable, and give accounting background to complement the presentations. Also noting that the screenshots can be used to follow along with the presentations if you don't have access to the software at that time. Closing the icon on the left-hand side, we're looking at the creation of a comparative balance sheet. The starting point is going to be the standard balance sheet, so we're going to use the standard balance sheet, change it to make a comparative balance sheet using the formatting provided to us by QuickBooks. So the next item we're going to go into is the Customize Reports up top. We're looking at the display area. When you're thinking about different periods on the same report for a balance sheet, and this will be similar to other reports as well, such as an income statement, there's two ways you can do it. One way is that you could basically set the range up top and you can change the total only to the months, and that'll give you a comparison that could give you more than 2 months of a comparison or more than 2 periods if you change it to weeks or something else. The other way to do it is to set the date range to 1 month and then select the previous period. So we're going to do the first option now. We're going from 11 to 12/31, that's 2 months, and then we changed this item here to months. Now you got the first month of November and then December, 2 months. These are as of a point in time. Next option, you're going to go into the display area, and now we're going to change this format, the range just for 1 month, and then select the previous month. This way you can only compare two periods at a time, as opposed to the previous option, which has the ability to compare more than just 2 periods. If I compare the same 2 periods in this way, now we have the latest month first and then the previous month, which is kind of nice because then you're reading the most important data, the most recent data first and then the previous month. You can go back into the customized report and then add the change. That's going to give us a difference column. So now we got the current month, the previous month, and the change between the two of them. If we go into the display again and we add the percent column, then we're going to get a percent. So now we have the current month, the prior month, the change, and then the percentage change. You might call this like a horizontal type of analysis type of report. We go back in and do our normal formatting now in the header and footer tab, removing the date, time, report basis, put our name in the footer. We'll also change the font sizes to negative numbers being bracketed and so on. And so there we have now our adjustments for it. So in the header and footer, we can also change the name up top to a comparative balance sheet instead of just a balance sheet. Also note that we might want to change the date range now that we have a date range of 2 periods that are being covered. So here's the comparative balance sheet that has now been changed. And now we're changing the fonts on this side, on the fonts and numbers at this point, bracketing the negative number, removing the pennies. So there we have that very nice looking report here that has been customized from just a normal balance sheet, so much so that we have a comparative balance sheet. We could change the name, remove the date, and we get this nice report for it.